All right, welcome back to another part analysis again. This is Gbpusd and welcome to my channel. Please, if this is your first time of watching my video, please do me a favor, like and subscribe to my channel, please. So without wasting much of our time, I want to quickly dive into the chart and let's look what we have this week. So let me quickly share what I'm currently looking at. So this is Gbpusd. So currently I'm on the weekly time frame. So first of all, as I've said earlier, what I normally do is I'll go to the higher time, either the weekly or the daily time frame, to point out the direction, the strength of the market is on, my directional bias. So the first thing I want to do here is to figure out what direction the market is currently heading to. So from the look of things, the chart is at least pretty near. I'll do some map up here. So what we can see here currently here is we don't need any further analysis. You can see that the market has a strong bullish momentum to the upside. You can at this point from the weekly time we can conclude that the market is pushing to the upside. You can see the momentum of the market. So this is from the weekly time frame, regardless we are on the higher time frame. So as we scale down, we're going to refine our level and where we should be looking to place it. But before we dive into looking for level where we should be looking to enter a trade, which first of all, the first thing we want to do in every market, regardless of the structure, we want to be able to figure out the exact direction we are looking to place trade, where we should be looking to place trade. First of all, the direction that we are looking to place trade, what is our directional bias, where we should be trading, either we are buying or selling. So from my own analysis, from the look of it, looking at the structure of Gbpusd, what I can see here is we have a strong bullish momentum to the upside. Now, if this is regarded as a base of this structure, from the look of things, if this is a base of, we have this bullish sequence of candle pushing to the upside without less selling pressure. So what we see here, we have this bullish push. After this bullish push, we have some weak sell here before we have this aggressive bullish push to the upside. All together. So same continuation. So we are after this week of bullish pressure. So this is a strong momentum candle, bullish momentum candle to the upside. Also, we still have this bullish push to the support. I think towards the week or before the close of the week, the sellers came into the market and still push the market to the downside. So from the look of things, you can say this last candle, regardless the bullish momentum pushed the market up, sellers at least came into the market and pushed it. So this candle regardless closed still bullish, but still you can see that the sellers at least took over the week towards the close of the week. So before we dive into that or candle anatomy itself, first of all, the first thing I want to do here, this bullish push lead to the break of structure. Now I will regard this is a week. Now most time people don't see this as a break of structure, but since I'm on the higher time frame, I will regard this as a break of the structure to the upside since I'm on the weekly time frame. So the first thing, once we be able to figure out that the strength of the market is bullish, is pushing to the upside, as we are scaling, once we know that the market is trending to the upside, what we should be looking to do? We should be looking for opportunities to buy. All together, our major goal is buying. Our direction is bullish, so what we'll be looking for is opportunity to buy. That is their ideology our taking to scale down to the lower time frame. That's the only thing we should be looking for in the market, except we'll do something else. Or let's see first of all. So once we have this bullish spike, let me remove some, I think I map out some levels, so let me remove it here for clarity purpose. So we have this bullish push to the upside. We have this, at least a brief period, like this is 2 weeks, 3 weeks of price action, 3 weeks of bearish price action, but there's a less push to the upside. This is a return. So this is a swing low, swing high, swing low. So we have a swing point here before we add a break of structure to the upside. So this is the weekly swing high. So we have this weekly swing guy. We have this is the base of the low. Let me remove this for now. Let me remove this for now for clarity. So what we have here is this is the base. After this bit of bearish move, this was the base before the aggressive bullish push to the upside that lead to the overall break of structure to the upside. So once price got to this level, we have some bit of sellers stepping into the market, pushing the market to the downside. Now, normally our approach to trading is we don't buy at high. Once we had a bullish break of structure, what do we anticipate for? We anticipate for a retracement altogether. What we expect the market, that whatever structure we're looking at from whatever time frame, we expect the market to push down. We expect the market, first of all, if the market is changing to the upside, we're looking for opportunity to buy, right? Once we had a break of structure, the next thing we expect the market to retrace to a major key level of demand before we can look for opportunity to take trade. So from the look of things, what we can see here, this is very clear and it's obvious. So we had a bullish price action, which we have a strong bullish price action to the upside. So the next thing we expect is a retracement to our major level, key level, which cannot align at this time frame. But this time frame will give us a clear direction of what we're looking for, what we should be looking to do in the market. So without wasting of time, let's get down to the daily time frame. All right. So I know in this video I don't really want to go to I don't want to bring out more price. I just want to focus on the current market structure. The current market structure we're seeing here, that's our trading style. So we want to, so what we can see here, this is structure. So scale down, higher time frame give us a brief narrative of the price action altogether. Now, higher time frame, which the weekly, what we see on the weekly, we have to see some sequence of linear candle to the upside, which we already know that the market is trending to the upside, which is the higher time frame give us a brief summary. Now, once we come to the lower time frame, as we scale down a bit, we can see that the structure, we can see a clear structure, how the market is behaving. You can see from a swing high, swing low, swing high, swing low on the lower time frame altogether. So we have this bullish push to the upside. This was a weekly bearish move to the bearish move, which is a form of consolidation. So what we see here, this was a bullish, this is the major structural low that will map out on the weekly time frame. This is a push, we had a retracement, and this was a bullish momentum candle. The week that was a strong bullish momentum, this was a break to the upside. So this, from the look of them, this is our trading range. This low, hold on, I think it should be around, hold on. So this is our trading range, where this was the major, this is our swing low which caused the aggressive bullish push to the upside, and this was the break of structure I was referring to. So you can see that this is the high. So what you can see here, we have this was the, you can see that this was the major move of the market. This was the high, the highest point that price got to before this push, form of downward push, before price resume its bullish push again. So I'm not going to consider all this because they are past price action. What our major focus here, only this price action is enough for us to analyze. So what our major focus here is this structure here altogether. We don't need to go back to this side. So we have this, once we have this bullish push, we had a break of structure to the upside. You don't consider it. So From here, this was the origin that led to the massive break of structure to the upside. So now, from the higher time frame, since from the higher time frame, scaling down to the daily time frame, we can see, based on the analysis, we can tell that this is our major trend is to the upside bullish momentum, because since we had a very aggressive push to the upside, so you can see the impulsive push to that. This is a long duration. This is 1, 2, 3, 4. This is almost 1 week of bullish price action to the upside. This is an aggressive push to the upside. So what we expect is based on our pattern of trading, once we had a break of structure, the rule is if we are trending to the upside, we buy when the price is low. That is from our own style of trading, buy at level of demand once the market is pushing to the upside. Now what you can see here, this is our major trend, bullish trend. This is our major trend. Now what we anticipate is once we had a break of structure, what do we expect? We expect a retracement, which is price pushing low, and at the point of correction to the upside, since we already know the market is pushing to the upside, we expect a retracement. At the point of reversal, we take a trade or buy there or look for level of demand, put our pending order. So that is the plan of setting. So that's the rule. So what we want to do here, we want to stick close as this market is retracing. This is our base, right? So now what we are going to do here, the challenge here is where, at what level, what is our level of demand from this impulsive. Now one thing I want to still point out in this video here is this is our strong low that lead to this break of structure. Now what we don't expect is we don't expect this retracement, this current bearish move to break below this low. At least it can come at least as low as to this point to make a lower low and push up, right? Or it can come in between or reverse at any level. But based on our own style of trade, we want to pinpoint a levels where there's high chances of price pushing to the upside, or level where now we expect the market to retrace, correct itself and push to the upside. So we want to be able to pinpoint at what level this market is going to reverse to the upside as this bearish move is pushing to the downside. So what we want to focus here is this impulsive move. We want to now, the reason why I focus on, you want to be able to figure out our level of demand, at what level this market is going to push to the upside as this bearish move is coming down. And also on the same hand, you can see analyze this market because it can make price correction pattern at any space, that is level where, like any level can make correction like form of W pattern here and push to the upside. So we want to closely analyze this market. Alright, so the next thing we want to do here is, since this is our base and this is our trading range from here to here, this is our trading range, and we want to figure out our demand level. So if I'm mapping from the daily time frame, I will map this. This is you can see a bearish candle. I can map this level as a level of demand. So I can map out this origin as my level of demand. So this is where I'm expecting this market to push to. I expect this market to push down to this level and reverse from here. So this is where I should be looking to take my trade. But I'm not going to, now after this, I'm not going to place my trade on the daily time frame. Daily time frame give me my direction, and sometimes it helps me to pinpoint my major level I should be looking to take trade. So from here, as I've said earlier, it point out a level of demand I should be looking to take trade as this market is pushing down. Now the next thing we want to do here is we want to study the structure, this retracement. The major market trend is this. Now the other thing you need to know is the minor trend, the current market trend is bearish altogether. the current market trend, the current minor market trend is bearish. Why did I say so? This is a current market move. Now we have this momentum bearish. This retracement is the current minor market structure. The current market direction, the current direction is this. But this is a counter trend. It's trading against the overall trend. This is the minor current trend that is ongoing. So what we expect this momentum of this market to die down. If this market is pushing down, what we expect is once it comes here, we expect it to make a correction. Once it made a correction, it's pushing to the upside, we'll take our trade to the upside, or we can put pending order, whatever approach you want to use. So the current minor trend of the market is this, which is trading against the major trend. Our focus is to trade with the major trend altogether. You can see this candle. We have a bearish momentum candle push to there. We still have sequence of bearish candle before. I think we have this push there. We have this bullish push, but the market is still trading to the downside. So the next we can still do is next thing we can still do here is hold on. Now, the next what we want to focus here is how this. Now, our goal is to take a trade. We want to now before we can take a trade, we want to study the weakness of this current minor trend. This is the current direction the market is moving, and this is a minor trend which eventually will come down. But if really this trend not come and it break below, we can change our perspective. As long as it's within this trading range, our bias is still set to buying. But as long as it's within since it's still within the trading range, we are going to study the momentum, how it's building up. Is it still gaining? From the look of things from here, it still has a strong bearish push to the origin. If the bearish momentum continue, strength continue, it's going to break below this. So we can likely avoid this by studying the strength of this bearish move. So the current market move is bearish, but the overall market structure, overall market direction is bullish, which are major trend, which is the direction we are trading to. So with this, we are going to scale down to the lower time frame to study this structure, and also this structure to pinpoint if there's any other internal demand level where we should be looking to place trade or look for confirmation, because most of the time price might not get to this origin before it pushes to the upside. So let's get down to the 4 hour. So hold on. Okay, 4 hour is really my structure where I look. This is the break of structure. This is the impulsive push to the upside. Hold on. I'm trying to accommodate everything for more clarity. Hope you can see it. So most of the time 4 hour is my major time frame. I look for my key demand level where I should be looking to place trade. And what you can see here from the look of things here is this was the origin. We have this aggressive push, bullish sequence of bullish candle to the upside. This was the top of the push. And when price got to this level, it started to push to the downside. Now, what you can see here is now from this forward, I can still refine my level of demand. So if I refine here, the most obvious demand level is here. Altogether, this is the demand level. So this from here to here, this is let's have reduced our risks. This is form of refinement. Now, what we can see here is we are seeing this is the minor bearish push. I would say the higher time frame give us a like a summary of the market. So this is the push. Now if we scale down to the lower time, we can see how the structure is building down. We can see we had a up break of structure to the downside. We have a bullish push. Now we can see that this is a minor trend. This is pushing to our origin. And before that, we have this level of, I think, this and this. So if I consider, so should I take, okay, let me go with you. Consider this. So we can see that this reaction, we can see that, look, we've tell that this reaction was as a result of this demand level, which price react from, which pushed the market to the upside. So what we expect here in this market, we are still waiting that, okay, since this demand level is already been mitigated, this is the remaining within the trading range. Within the trading range, this is the range. This is the last unmitigated demand level. So we should be expecting price to at least push to this level and push to the upside. And before we can take trade from this level, your price has already mitigated this level. Now so what we want to do, we want to study the bearish market structure trend, minor trend that is building down. So this is what we want to study. Now we can see that this is a fine bearish market structure. So most of the time, there are times people look for opportunity to take counter trend to their major level. So, but if you look for opportunity to take it, this is what we call counter trend altogether. So this is a bearish market trend that's building down. So if you want to take advantage of this, but most of the time, I don't really do it, or because you need to be very careful. So this is also a level of demand altogether. This was the first level of demand. Once price retraces, it drive the market down. So what we should be expecting here is we can either place our trade from this level here to target this origin, this base, and push the price up, or we can wait to observe the strength of the market. Since this level is already mitigated, I would love to take it from the picture so that our major focus should be on this level, this and this. So either go for confirmation here towards downside, or you wait for price action to this level. So you can see that this is a current structure that's pushing. This is the current market direction. Those that are trading lower time frame can take advantage of this, or day traders. The current move of the market is this, which is bearish against the major trend. So if you are trading, you have to be careful. So you can see, for the sake of money managers, we'll see scale down to the lower time frame to see Let's first of all, let me just go to straight to 2 hour. Okay, so you can see that our level of demand, sorry, supply is still neat and clean here. It's still neat and pushing down. Our level of demand, I think, is still okay. Yeah, this was the demand level that price that pushed the market to the upside. So you can see scale down to the 1 hour. Hold on. Square network is quite slow. Yeah, so I think there's no much. So I said let me quickly share the Gbpusd video or analysis or what I am looking at in the market to you. So this is what I'm really expecting from the market. So this is the supply zone and scale, and this is the demand level we are looking to place our trade. So my concern here, my focus here, or my own style of trade, based on my own style of trade, I'll be waiting for price to push down to this level. Demand, I can let go of the supply counter trend. So I'll look for opportunity to take trade from the demand level. So my entry is going to go in this way. Let's see. Okay, depend on the pips, you know how to at least manage your risk. So target should this first level target. If price not get to this level first before coming to the base, first level target should be at this point. Definitely price will react from this level. So that's for that for now. Thank you. Peace out.